Property management is one of the most important factors when you are thinking about being a real estate investor. I often talk about this. It's easy sometimes to find a property, right? Just like it can be easy sometimes to find a spouse and you get married. And there's not a ton of work when you go and do the wedding. That's like finding a property. The work comes in the marriage afterwards for 20, 30, 40, 50 years. And it can be very rewarding. That's the same with property management. You've got to find someone who will manage the property. Actually, funding, buying, finding the property and closing the property is a very short process in the vast timeline of owning a property. And the way to optimize a property is through proper management. And today, I want to break down with you one of the best property managers in town in Champaign-Urbana, a guy that I have used for all of my properties in Champaign-Urbana since 2020 when I started buying apartments. And that is Travis Heath from JSJ Property Management. Travis, I know you are a real estate investor, but I know you started this property management company. Talk about how you started JSJ Property Management.
Yeah, so I originally had another career in insurance and financial services, but I've always been interested in real estate. And so during the course of that, I had used a third-party property manager to manage my own real estate so I could focus on my insurance and financial services career. But a few years into that, I realized that they weren't a very good fit for me. And I had some friends that were also using third-party property management companies, and they weren't happy with it. So I guess it came to the old adage of, if you're going to do it right, do it yourself. And so me and my wife ended up forming a small group of people to get together with their properties, collaborated, and we started off very small, mainly so we could control our own real estate.
So what makes JSJ Property Management different than other companies in town that manage properties?
Yeah, so we always try to look at things from an owner's perspective, since I'm an owner myself. So we have a very good handle on what expenses mean to an owner, and because I'm seeing the same things on an owner statement as, for instance, you are, and we understand how that affects them and what that means to their bottom line. Not everybody's that way.
Travis, you mentioned you were an owner of real estate. How did you get into real estate investing, and what are you focusing on real estate investing now?
Yeah, so I originally got started, as most people do, just with single family homes.
Where at?
So my first home was actually in Rantoul.
Okay.
So
great cash flow market. We talk about Rantoul. We talk about Danville as great starter markets. You get started in Rantoul with a single family home?
Yep. My first two rental properties were in Rantoul. So I still own one of them to this day, actually.
And still own one of them. So you start in Rantoul and then it grows to what? What's the next step for you?
Yeah, so it started in Rantoul. I mean, at the time, the Rantoul market, that's been 15 plus years ago. I mean, it was a low barrier to entry market, right? I mean, you could get in with very little money down, and still back then, like it is today, I mean, it cash flows very well. So it's very easy to get started, especially if you're going to be managing yourself like I was. And so I switched from Rantoul after I had the first couple of properties, and I started buying single family homes in Champaign. After I purchased some single family homes in Champaign, natural progression, I moved up to a duplex, and then, a 3-unit, and eventually started building new construction apartment buildings.
And how many new construction buildings have you built?
7 so far.
And has it been like the same model? Has it been rinse and repeat? Has it been different?
It's 5 of the 7 have pretty much been the same model, in kind of like the same corridor of town. And then 2 of them have been substantially different.
What's the difference in managing a property that's already built as opposed to a property that you've built and then have to lease up? What are the different challenges you have?
Yeah, probably the biggest challenge is when you have an existing property, you're going to factor in a certain percentage for a renewal rate. So, if you're on campus, you're going to get about 40% renewal rate, give or take, depending on the year. If you're off campus, you're going to get 60%. So you already have that built in year to year. New construction, you're starting from zero. So it's taking on a lot more risk and can be nerve-wracking.
We talk about making sure you're at market level rent. What can the market actually sustain? Because every real estate investor wants, I want to get my rents up, but you got to be cognizant of your tenants, of the renters, of the income quality or how much income they're actually making. So in Champaign-Urbana, what is it that helps you understand what people can do as far as a rent raise goes year to year?
Yeah, I mean, the most important thing is to look at the market, and you're going to have a really good idea when you start advertising the property. If you've advertised it for too high, if you try to push it, too high. In Champaign-Urbana, if you had, a decent property, you're really only going to probably have a 2 to 3, maybe 4 week market time. If you start extending it past that, and there's certain other criteria that we use within our company, then we know that it's priced too high, and we just start dropping prices.
What would you say the average rent raise in Champaign-Urbana over the last 2 or 3 years has been, percentage-wise?
3 to 5%.
3 to 5%. How do you guys deal with the turnover in August? So for people that don't know, turnover is something that happens in college towns, usually the first week of August, the last week of July, where students come in and they're getting turned over. Now, you guys do a lot of off-campus stuff though too, and a lot of your leases are lined up to coincide with that turnover 2 or 3 week session. Talk about your turnover process and how you're able to sign. Is it 12-month leases? Is it 11.5-month leases? How do you actually get that and turn those units in time?
Yeah, so all of our leases, around the campus corridor, or close to it, slightly off campus would be what's considered a 12 pay lease. And so how we handle turnover, it's essentially organized chaos. Now, the good thing is, especially in Champaign-Urbana, where we live because of the University of Illinois, everybody's ramped up for turnovers, including the contractors. And there's other people that come in town, other contractors to help with cleaning and painting and stuff like that. So you just try to be organized. And like I said, sometimes it's just organized chaos and put multiple pieces of the puzzle together.
What are some common mistakes that you see real estate investors who are using a third-party manager make all the time?
Investors that are using a third-party property manager?
Yes, like almost stuff that you would be, maybe you guys butt heads on. They say, I don't want to repair that, or I don't want to do this, or I don't want to, where you feel like there'd actually be value there.
Yeah, I think there's a couple things. I mean, a lot of people don't have necessarily proper expectations when they are relying on a third-party property manager. A third-party property manager, everyone wants to talk about passive real estate. You're passive, investing, and just mailbox money, whatever it may be. But there's a cost associated with that, right? So it's not always cheap to use a third-party property manager. I think sometimes people underestimate what that cost is, right? And, a lot of times they will have unwarranted expectations as far as how much you can push with, right? Along with the cost, you had some owners that want to cut corners. And I have an adage that it's, they'll, to save a nickel, they'll end up spending a dime, right? So they don't want to do it right the first time. They don't want to do it right the second time. Finally, the third time when something happens, they do it right. And if they would have done it right from the beginning, they would have spent the money the first 2 times.
What do you feel like is the best ROI when it comes to maintaining or putting money back into a property?
If you have a property that needs work, right? So, I mean, I'll back up a step from that. So my personal properties that I own, I tell my staff that, if we built that property in 2020 and you look out 20 years from now, or even 30 years from now, I want that property to be a time capsule from 2020. I never want to let it get dilapidated where, you can tell that it's, it shows that it's 20 or 30 years old.
Yeah.
Let's say that, right? So I think that's probably, if you're dealing with a new construction, a newer property, not letting the deferred maintenance take over, right? If you purchase a property that maybe is a rehab that somebody's done that to, then I think the biggest thing you can do on the ROI is update the units, right? I mean,
Like flooring, paint.
paint.
Do you do cabinets? Do you do countertops? Do you do bathrooms?
You can do that. Yeah, I mean, all of it.